Hey everyone, Couch Investor here, back with another Square monthly analysis video. In this video, I'm going to go over the new price target of $225. We're going to talk about why I still think Square is on its way to become this next generation of bank, even though Jack Dorsey said they're not trying to compete with banks or will not try to compete with banks. They're slowly but surely going to compete with banks whether they like it or not. We're going to look at the graphs, but before I get into that, we're on our way to 4,000 subscribers. So if you haven't subscribed yet and want to help me reach that goal, hit that subscribe button. And if you like those videos, leave it an early thumbs up, as it really helps me grow the channel and get my videos out there. So without further ado, let's look at the graphs. Alright, so last month's video was right around here when this type of gap happened. It quickly recovered and closed that gap right around $134 or so. So if you had your orders back under the $140 mark, you picked up at a nice price. Then the stock went all the way up to around $170 or so. Then yesterday was a red day, finally a red day, because I felt like the stock market could have used such a day a bit earlier, but that's fine. Now in pre-market we're at $158. Now if you don't feel comfortable picking up at those prices yet, you think the stock could use another pullback, I would think maybe 150 as a solid support line. Who knows, maybe it will go back down, maybe it won't. As of now, anything at 150 is worth picking up. Alright, so before I get into this new price target and talk about why I think Square is becoming a bank, if you don't like buying all-time highs, it's completely normal to wait and see if the stock goes back down a bit. The stock will always have small pullbacks no matter what. Even if it's Tesla or Apple, they always have those small days like yesterday, for example, where it pulls back, and that's a way better opportunity than buying the stock when it's going super fast on their way up. So now let's go and look at these new price targets from those analysts and talk a bit about why I still believe Square will become this next generation bank. Alright, so our first new price target is from this analyst called Dan Dolev at Mizuho Securities. So the analyst's new buy rating comes with a street high price target of $225, indicating a significant upside potential of 46%. Now this was a couple of days ago, so maybe it's now 40% or so, depending on when you're watching this video. So according to Dolev, Square's best of breed technology means it is best positioned to benefit from the tectonic small to medium-sized businesses, so the SMB dislocation. We expect SMB dislocation to cause tectonic shifts in the $85 billion US merchant acquiring and ancillary services total addressable market over the coming years. Now, he estimates that Square's outsized incremental share gains coupled with an historic SMB dislocation post the virus could help drive $400 million or 20 to 30% incremental gross profit opportunity for Square's merchant acquiring business. So that's the seller side of the business. He also talks about the Cash App. So its neo-banking Cash App could drive 4 times growth in gross profits thanks to superior unit economics. Cash App ain't stopping at 30 million users. Our analysis shows user may double by 2023. Now we have another bull case price target, this time from Wedbush. So as of now, they have a neutral case at $140, but their so-called bull case takes the stock to $250 to $300, assuming a combination of Cash App reaching a 200 million user base. That's more than the other analysts, from 30 million right now, with the seller segment recovering from the outbreak related challenges. Now, again, this is 200 million people in their user base. He did not tell us when that would happen. I would say maybe 4 to 5 years is the usual future outlook when those analyses are made, right? So again, a strong point on why I think Square is becoming a bank is this right here. So for example, Square Capital is becoming a force in processing payroll protection programs, so the PPP loans, carving out a niche for itself among smaller loans that big banks often ignore. Like we've seen, Square is mainly growing very fast in the unbanked states. So as of late June, Square Capital facilitated approximately $820 million worth of PPP loans at an average size of $11,000, nearly half of which went to businesses in areas where the average annual household income is less than $50,000. Not only is Square Capital lending to businesses that are underserved or not served at all by the traditional bank, it's doing so in more efficient fashion. So again, reiterating the unbanked states in the United States. In the span of 6 weeks, Square originated the amount of loans it would take a standard bank more than 4 months to put into motion, which is insane. Now, another avenue for growth for Square, though it's still in its early stages, is a friendlier version of the old school payday loan. So a payday loan is basically a very short-term loan, but with pretty high interest rates, something the company is currently testing in select regions. There are more payday loans outlets in the United States than there are McDonald's, which says a lot, indicating this unsavory business is big business. Now, using simple math, a borrower at a traditional payday loan store would repay $230, assuming the loan is paid on time, to borrow $200, which is 14% interest rate, which is very high. So Square can knock that down to $210. If that would work, that would be an insane new avenue for Square to grow into and to explore. So the company is testing the idea in regions where Cash App is popular, owing to large swaths of users that are unbanked, a demographic predatory lenders often prey upon with very high interest rates. Alright, so to conclude, I will be waiting for that $150 mark to add to my position. Where that will happen or not, I don't know, but if that happens, I will certainly add to my position. Now, regarding the bank aspect, I 100% believe Square will be becoming a bank, especially in the unbanked states, because that's where they are growing faster than in the other areas. They have so much cash on hand right now that not going into that venue, that new venue of payday loans, maybe the more PPPs, whatever, more of those segments, is a shame, because the interest rate, the gains that they can make from that segment is going to be pretty big. It's also going to help people that don't use Square, for example, because the banks will see, oh, we've got a serious competitor right there, maybe we should lower interest rates as well. So overall, it will change the whole business for us, for people that use Square, for people that don't use Square. So anyways, it's going to be a win-win situation, whether you like it or not. And that will be it for this monthly analysis. If you liked it, consider leaving a thumbs up. And if you haven't subscribed yet and want to help me reach 4,000 subscribers, hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.